And welcome to Market Call. I'm Roger Peterson. Colin Cieszynski is on the show with us today. He is the Chief Market Strategist for SIA Wealth Management, and he will be taking your questions on technical analysis. And you, of course, can call us toll-free at 1-855-326-6266, and you can email us at marketcall@bnnbloomberg.ca. All right, Colin, thank you very much for joining us. We appreciate you taking the time and talking the markets and what a September it has been right now. We're into October now, into that last quarter, but boy, oh boy, September was a win for everybody.
It sure was. I mean, we look and historically, the middle of August to the middle of October have been the weakest and most volatile time of the year for stock markets, but not this year. We're seeing usually you get big corrections and sell-offs and worries and fears, and not this year though. The markets have been rocking and rolling right through September, new all-time highs, not just here in Canada, but in the U.S. and around the world, we're
going to look overall markets in a second, but let's talk gold first. Precious metals dominating. Have we reached a peak with that, or is there more room?
At the moment, it looks like they want to keep on going. It's quite impressive, this steady march upward we've had for precious metals. And more importantly, we're not just seeing gold go, but now we're getting catch up. We've got silver finally broke out over 35 for the first time in years, and it's taken another big run at 50. This is like what things we've seen in the past in 2011 most recently, and we're seeing platinum start to move. And I even, on my way in, I saw somebody was starting to talk about palladium. Nobody ever talks about palladium. It's getting going when.
And what any indicators why that's moving like that? Just palladium, for example?
I think it's just a catch up. We're in this phase where all precious metals are rallying now, not just gold. Gold's had such a move. People are taking some profits out of that and getting into things that haven't moved up as much yet. But overall, I think what we're seeing with the precious metals is they're rallying on anticipation of a general weakness in currencies in the U.S. dollar. But really, this is one of those situations where we're seeing gold go up against all currencies. And
technology sector, it's being driven by AI. Are we approaching an end run with that? Again, it's the same question. Is there more room?
What I'm finding with technology more recently is we're starting to see rotation within it. So some parts of technology are starting to level off and even have corrections, but the parts that are related to AI are still doing well. And small caps, again, it's a case where we've had the mega caps have run so far for so long that now some of that capital, people are taking profits in those areas and now starting to redistribute out and going and looking at the mid and the small cap tier that haven't moved up as much and have room to catch up.
Okay, and then just overall markets, where are you looking? What are you keeping an eye on?
Well, what was interesting about September was we had, not a surprise, we had a great move in resource markets. So Canada, Australia, Saudi Arabia, any oil-sensitive market, the metal-sensitive markets, South Africa and places like that all had really good runs in September. But the other part I'm looking at was then we also had in Asia Pacific, China had a good month, Taiwan had a good month, Korea had a good month. So it's it's pretty broad-based, but most of what we're seeing, as we just talked about with sectors, is at the country level as well as it's kind of metals and technology if you're sensitive to that, those are the areas that are doing particularly well right now.
Okay, we are going to talk some more, but we got to go into a break right now first. And we will have you join us. We'll be back with Colin of SIA Wealth Management to take your questions on technical analysis. Back to Market Call. I'm Roger Peterson, and Colin is joining us now. We're going to get right to your emails and your calls. First up, we have an email from Peter, and the subject is, please ask your guest for their technical analysis of HSY, Hershey. I bought it on the basis of fundamentals, essentially that high cocoa prices would level out. Does that trend appear to have legs? Colin.
Yes, it's certainly starting to look that way. Could we bring this out to a 3-year chart, please? At any rate, Hershey was in quite a downtrend for a period of time, and now we can start to see it here, where we had peaked back in early 23 and had been steadily declining into the mid part of this year. But look at this. We've now got a really, really nice base forming here. A higher low back in the summer. We're continuing to steadily climb. There's some resistance here in and about $200. If this chart breaks out over 200, this looks really exciting. Right now, it's just a beautiful base forming, nice early stage accumulation. We'll see if it continues or levels off, but so far, so good.
Things are looking good. You're optimistic with it.
Yeah.
Okay. Let's go to a caller. And Costa, you're talking the Montreal Constellation Software. Costa, thank you very much for joining us.
Thank you, gentlemen, for taking my call. Colin, I would kindly appreciate some wisdom on Constellation Software. What do the charts tell you at the present moment? I'm thinking about going very hard. I find it very, very attractive at this level. Thank you very much. Have a great day.
All right. Thank you. Costa.
Thank you.
Colin.
So I have been finding with Constellation that it's rolling over a little bit here. And I mentioned in our previous segment that we're starting to see some of the capital rotating out of some of the big cap tech names. And so Constellation's one. We used to own this in our portfolio. We rotated out of it back in the summer as it started to weaken. It started to come off. So it's one that it's had a fairly sizable correction here in the last couple of months. I'm not sure it's bottomed out yet. I think it may need a little bit more time. At some point, it's likely to. I'm not sure if we're there yet. At this point, we're still kind of in this downtrend of lower highs. I'd probably at least want to see it get back above 4,000 again for now, and then we'll watch it as it continues. But at the moment, it's still looking a bit vulnerable here. It's still looking weaker on a relative basis.
What would you be looking that might show it might be turning around?
Some kind of a stabilization, some support for. I mean, we did have this one bounce off of 3,600. I just want to see, does it continue to hold over time, or do we get some kind of a successful retest?
Okay. John from London.
Hello, Roger. Thank you, Colin. I bought Reddit just about a year and a half ago. It's done very well, probably too well. It's had a recent pullback. It seems the investors seem a little twitchy to any news. This time it was GTP is going to take over some of the Reddit customers. What does the chart tell me about Reddit, and what is your sell signal, and what is the resistance we need to overcome? Thanks very much, Colin.
Thank you.
John. Oh, cool.
Thank you. So one of the things we want to note here is, and this happens a lot with stocks that have had big moves, is like this is a stock that back in the spring was at $80, and now it's above. It was up to 240. So that's a triple in a few months. And when we get those kind of explosive moves, it doesn't take much for people to say, okay, that's it, I'm out, I'm going to take profits. And it doesn't even have to be something related to the company. And this is something we've seen when we get to extremely high valuations, when we've had really good markets, is it doesn't even have to be Reddit says something. It could be somebody else says something that's kind of somewhat related, and then people will start taking profits on the stock. So I think that's the kind of situation we're seeing here with Reddit at the moment. It's something that, as I said, more than tripled in 3 months. So it was overdue for a correction. I do see it's come back, and it's kind of hanging out around here, around this $200 level. If we go back a little further, we can see there was a previous resistance for it at 180. We would expect that to kind of emerge as potential support here for it. So at 200, 180 range is where you might start to see some support. Initial resistance, I'd probably be looking, say, around 225 on a bounce. And then we can see on this that there was also some resistance near 240. Just the other thing I'd watch for is we'd see, because you had this one peak near 240 in August and another one up above 250 in September. If you got a bounce, I'd be watching out to see if we're getting a head and shoulders top here, but it's too early to say that's the case. Right now, this looks like a normal pullback after an absolutely humongous move.
Okay. Dominic from Montreal.
Yes, hi. Thanks for taking my call. I'm looking at the 1-year and 3-year charts of Tech Resources and Capstone Copper. I wonder if I could have your analysis, and maybe if you have time, a comparison between Tech Resources chart and Capstone Copper.
Okay, so I have the tech chart up right now, and we can see. Yeah, I mean, it's been a base metal. I mean, all the talk has been about precious metals, but base metals have done really well too. And so something we'll see here. You can see this was in a very long-term downtrend. It's broken out of this downtrend, and it's still working its way higher. Now, specific to tech is that breakout was driven by the takeover offer, and when you have a company that's being taken over or in a merger, it can kind of drift through the merger periods. So that's something to keep an eye on with tech. But on the other hand, I looked this morning and I see the copper price at $5. So we're certainly getting good commodity price support here. And so that may help it. But I mean, at this point in time with tech, you got to I'm kind of watching in terms of, well, is it a company move? Is it a sector move? Do we see Anglo-American moving? And it's a bit of a, makes it a bit. It's a bit more challenging. It's a bit muddy when you get stocks in takeover place, because normally when you're in a takeover, you'd say, well, it'll rally to the offer price and then just flatline until the deal closes. But in this particular case, you could see some movement if around just sentiment towards the sector, because it might just trade off the commodity price.
What are some of the signs you might look for that to indicate which way it's going?
The big one would be keeping an eye on the copper and other metal prices at this point in time. If copper blasts through $5 and keeps on going, then that could lift the value of both tech and Anglo at the same time.
Okay. Chris from Victoria, BC, thanks for joining us.
Oh, good morning, Roger. Colin, thank you for coming back to the show. I always appreciate your thoughts, and I'd be very interested to know what you have to say about ASML. It's really one of my only semiconductor names, and it's had a very good run as of late. It's only about 1% of my portfolio. It's up about 40% from where I bought it, and I'm wondering, how would you approach a position like this, and if you would sell it at this point, if you'd have an alternative? Thank you so much.
All right, thank you.
Thank you. So ASML, I mean, this thing has gone on a rocket ride, as we can see. This was previously trading between 600 support and let's call that about 850 resistance. So that was about. So often, what we will do is, when we're looking at target prices, is we'll take the distance from the low to the high and where it broke out. So that's about $250. Would give you a measured objective on this of around 1,100. And I mean, I can see it. It's up above 1,000. And I mean, something else we can think about is we're looking in these situations, what we call a trailing stop. Mm-hmm. As the high of the stock continues to go up, we move behind it and say, I'm going to just keep bringing my stop up behind it as well when you go on that kind of a move. So some people might use a dollar amount. They might do, say, $100, or they might do 10%. Or something like that, enough that you kind of stay within the trend and don't get kicked out too early if it keeps on going. But at the same time, if it does start to roll over, gives you an opportunity to take profits. So that's something you might want to consider when you're in a stock like this. So far, as I mentioned, the semiconductor names and things related to AI is one area of the large caps that is still holding up for now. But definitely, we do want to keep an eye on this. I'd be looking more to an eye of course, holding with an eye to where do you take profits, because at the same time with these things, you can wake up and see them down 10% in a day, just because, again, they've had such a humongous move.
Okay, Colin, thank you. We're going to talk more with Colin Cieszynski of SIA Wealth Management. We'll be taking your questions on technical analysis. Stick around. And welcome back to Market Call. We're going to get back to the phones. Colin, I know you want to answer a bunch of questions. So let's get Deborah from Okanagan Falls, BC. Deborah, thanks for joining us.
Oh, hi. Thanks for taking my call today, gentlemen. My question is on Costco. I hope I'm reading this chart correctly, but it looks like it's hit a support level of about 915 today and could be trading in a channel for a possible swing trade. That being said, I am an overall mid to long-term holder. Do you see it going to the 860 range for an entry for me?
Okay, let's take a look at it here. So it looks to me on Costco is one where we've had a really nice run here. It is starting to come over. We may have had a double top up here. Let's watch out for that. If you are looking on a trading basis, that looks around 1050 for resistance. And so far, again, I would go back to this old support range looks about 860 to about 900 as an area that it could potentially drift into here.
And when you see that the double top there that you were talking about, what should they be looking for after that may cause concern?
It's a significant resistance level, so it's one that could act as resistance on an extended basis. So we're just watching that now. You've had 2 runs at 1050 and been unable to get through it.
Okay. All right, Joseph from Montreal. What's your question for Colin?
Good day. Thanks for taking my question. Colin, I want to get your opinion on Pembina Pipeline. Technically, this looks great. The weeklies will look better than the dailies. I have a small position thinking that it might actually fare a little bit better than its colleagues, TC Energy and Enbridge. It looks like there could be a catch-up trade there. So relatively speaking, it looks like there's probably slightly more value, even though it's a slightly smaller firm. I just want to get your opinion on Pembina Pipeline, and if you wouldn't mind speaking of your relative strength analyses and what you would look for when you're comparing firms in a similar space. Thanks.
Absolutely. So I will start with relative strength analysis, and it's a good opportunity since we're talking about energy. So at SIA, what we do is we do what's called relative strength analysis, and we look at head-to-head battles of stocks against each other, indexes against each other, sectors against each other on a one-to-one basis, and we do billions of calculations every single night. And what that tells us is who's winning these battles. And by who's winning the battles is where is money going into and where is money coming out of. And who's outperforming on a relative basis, because within any of these groups, within any universe, whether it's from asset classes right down to stocks, right down to sectors, there's always somebody who's winning and often somebody who's losing. We want to know that is money going into certain stocks? Is money going into broad-based across the board, the rising tide lifting or sinking all boats? So I thank you for asking this, because it's a good opportunity to mention that we're seeing energy stocks starting to come up in the rankings, and it's particularly intriguing right now to us because the price of oil isn't doing all that great. It looked like it wanted to move last week. This week, not so much, because we've got this OPEC Plus meeting coming up, and everybody's wondering how much are they going to increase production. And we had ADP payrolls come out yesterday, and some people are going, well, how strong is actually the outlook for demand? So we're always seeing that weighing back and forth. But what's intriguing is that historically, technicians say the stocks tend to lead commodities when you're wondering, and in this case, even though oil isn't doing well, the energy stocks are starting to do really well. So let's take a look at Pembina Pipeline now, and so what I'm seeing here is we talked about we've got kind of this emerging downtrend at this point in time, but you do have support here in and about $49.50. So it's been on an upswing. It's had a pullback. It's hard to say here whether it's kind of in this range bound between 49.50, 58.50. It's kind of been creeping up towards the high end of that, but I would like to see it kind of break out over, that looks about 56, 57. At least take out that one previous high there, so you're not in this downtrend of lower highs anymore.
And could you see it being pulled up by the market, by the sector itself as well?
It's possible, yes. And we have seen some of the energy names in particular starting to pick up, particularly some of the more senior names.
Everybody loves to get in on the ride, right?
Absolutely.
Okay, Alfred from Mountain View, California. Is that where you're calling from, Alfred?
Yeah. Good morning, gentlemen.
Thank you for calling.
Thank you. Can I have your technical perspective on Berkshire Hathaway, please? Thank you so much.
Certainly.
Always an interesting one.
Absolutely, and here's an interesting one, because we're in a case, and we're seeing this with some names. Some names are still on these rocket rides to the moon, but we are seeing cases like a Berkshire Hathaway where we were in a solid uptrend for quite some time, and now we're starting to level off a little bit. So we've got resistance up here previously that looks about 550. You can see today we've slipped back under 500, the round number, and so the next support for it looks in and around 450, 460. To me, it looks like we're kind of getting into more of a sideways trading range here for Berkshire at the moment.
And so what do you do with that?
Well, in this case, it's if you're a long-term holder. I mean, people who have a short-term inclination might trade back and forth within the range, or if you're a long-term holder, just recognize that it is it looks like it's moving into a consolidation range, and it's not specific to Berkshire. We've been seeing that generally with the insurance stocks, that a number of the stocks in the insurance sector have kind of leveled off or had corrections over the last 2 weeks.
Okay. All right, we have to go to a break, but when we come back, we'll take a look at Colin's past picks. Time to take a look at Colin's past picks from March 24th, 2025, so about 6 months ago, roughly. And let's talk about, first up, Agnico Eagle. It was 104 then, 169 now. Nicely done.
Thank you. The gold stocks have done amazing. I was on here last year as well, and had talked about Kinross in the past as well on previous calls. So I had gone with Agnico this time. We own Agnico in our portfolio. We also own Kinross in our portfolios. I talked about the relative strength rankings and who's winning the battles. Whether we look at the Canadian universe or international universe in stocks, golds are winning. Golds are right up at the top of the rankings. They're still right up at the top of the rankings. This one's been rocking and rolling, and it's still doing well. So it's one that we're pleased with, and it's still very highly ranked, and we continue to hold in our portfolios.
So you're still confident in it?
Yep.
You still think lots of room to go?
Well, I say on these, the trend is your friend till it ends, and so far so good.
All right, let's go on to your next pick, which is T-Mobile. This one, though, a little off now. It was 258 back in March, and now 230 all U.S., so down about 11%.
Yes. So at the time when I was here at the end of March, the market was still going down. It was still tanking. And what was at the top of the rankings at that point was defensive stocks. And then President Trump came along in early April, delayed the tariffs, and the market hasn't looked back since. And one of the things we've seen since then was a rotation out of defensive stocks back into cyclicals, back into momentum, back into aggressive, confident technology, communications, precious metals. So that's what happened here. So and what we saw with T-Mobile was basically it's just kind of not done much. It hasn't gone down. It just hasn't gone up. We ended up selling this out of our portfolios back in the spring, basically just as I capital rotated out of defensive stocks and went elsewhere.
Okay. And do you see it changing, going up, or is it just going to sit along, kind of hover along right now?
It looks like it probably just wants to grind sideways, maybe a little higher, unless we start seeing people get fearful and defensive again. This one's kind of been left behind at the moment.
Okay. And then last one's BMO MSCI China Selection Equity Index ETF. And what did we have it at? You picked it was at 1946, now up to 2371. So
it's been doing
22%.
Thank you.
You're welcome.
That's good.
I do
That's
quick
good.
math.
And it is. And 1 year on 41%. And as we can see and here's a good example, right? So we had this big sell-off here in the world markets back in March. And then since then, it's just been working its way higher. Very nice, very, and a lot of markets around the world have been doing very well, especially overseas. This is a broad-based global advance. It's not just one sector. It's not just North America or one region. It's everywhere.
I guess it's so important then to be looking outside of North America then, and looking for possible options.
Absolutely, especially because on a currency basis, we've had these big moves in the United States. But at the same time, we've had big moves up in the stock market. We've had a big move down in the U.S. dollar. So if you're a Canadian holding U.S. stocks, there has been a lag in the U.S. performance because of the currency. Whereas on a more common currency basis, Canadian and international equities have actually done better than U.S. equities this year, even though they get all the headlines.
Okay. Colin, we're going to be back with Colin Cieszynski of SIA Wealth Management to take more of your questions on technical analysis. Stick around. Welcome back to Market Call, and we're going to get right to your calls with Colin. Thank you very much for joining us. Tony from Sarnia, what's your question for Colin?
Can I get your short and long-term technical analysis on United Health? Thank you.
Certainly. United Health is drifting a little bit. I've talked about how, and it's something I've seen more recently, is that there are some areas that have been looking a little bit tired, and this is one of them. And we've seen United Health here kind of was in at least going sideways, but it does look like it's rolled down a little bit. It's trying to bounce, but it's unclear whether that's going to keep going or not at this point in time. Is it just a consolidation within an emerging downtrend? It hasn't broken the downtrend yet is the problem. So if you're going to see it going back up, you'd kind of need to see it getting back above 380, 400. Until then, it's had a nice bounce off its recent low, but it is just kind of drifting here. And that's something we are seeing generally is that, for example, the NASDAQ is doing well. Momentum stocks are doing well. The Dow is kind of just going a little bit more flat. It's more value kind of stocks, and it doesn't. So they're as I noted with things like T-Mobile, United Health, some of these more defensive kind of value names are not participating in this market rally the same way as the cyclicals.
And when you're looking for that bounce, how long do you look for with United Health, say? When it's sitting there, do you have a time frame where you're saying, no, we're not going to get it this time?
No, at this point, it looks like it just kind of wants to grind sideways in the lower range. And so I'd be focused more on price than time at this point.
Okay. Jason from Toronto, what's your question for Colin?
Hi, Colin. My question has to do with the Meta stock. I think you just said something about it. But the outlook of Meta for the future. I do have Meta in an ETF as well, but I wanted to know more about the risks involved in holding it for long term. Thank you.
Okay. Well, generally speaking, I've noted that one thing we are starting to see a little bit is if you get away from semiconductors and AI and whether that's software or semiconductors, some of the other parts of tech are starting to pause and consolidate. Mm-hmm. And we're seeing this a little bit here in Meta. It's had a good run. It's run into some resistance around 800. But at the same time, if we go back to this, we can see this long-term uptrend remains intact. So in this case, I see this so far as more of a normal consolidation within a long-term uptrend for Meta, and not a surprise. It's just some of the interest in the market has gone to and in tech has just gone to other areas for the moment. But so far, it continues to hold up.
And what are you looking for when you see a good run like this, 672% over 3 years? What are you looking for the next little while?
I would say, this is the kind of stock that in the past, if we look at, say, it's what I call a step pattern. It goes up for a while, then it consolidates for 3 to 6 months, and it goes up and it goes sideways for 3 to 6 months, and now you've had another run up earlier this year, and you're into one of these sideways phases that could run for 3 to 6 months.
Okay, so a little patience then.
Yeah.
All right, Jacob from Toronto, what's your question for Colin?
Hello, yes. Good afternoon, gentlemen. I'd like to ask your guest about Shopify, if I should or if I keep on holding it or sell it, and also if he has it in his portfolio. I'll appreciate it very much. Thank you, and have a nice weekend.
Okay, thank you, Jacob. Colin.
Thanks a lot. So yes, we do still own it in our portfolios. It's one we've held for quite a while. It remains very highly ranked within Canada on a relative strength basis, and Shopify is doing well. And interestingly, in this particular case, I've talked about some areas of technology have continued to do well. Retailers have been picking up as the central banks have started to cut interest rates. Mm-hmm. Stocks with sensitive to retail and consumer spending have actually been doing really well. So Shopify we own in is highly ranked. Also, Aritzia is highly ranked, and we have that in our portfolios as well. So right now, Shopify, again, has bottomed out in March with the market, but it's really been in an upward trend for about a year now. And it's continuing to go up. And I think that Shopify is sensitive. Of course, people look at it with not just Canadian consumer spending, but the U.S. And you've got the U.S. has held up fairly well. Tariffs were not a complete disaster for the States. And so it's basically still doing okay here. And as I said, it remains highly ranked, and we continue to hold it.
Any other retailers you're keeping an eye on?
In general, other retailers have been a little bit more mixed here. but those are the two names that we have seen doing quite well lately.
Okay. We're going to go to Jim from Peace River, Alberta. Jim, what's your question for Colin?
I'm wondering about adding either tourmaline or Canadian natural, and it's because of natural gas. Mm-hmm. Which do you think would be a better add in a long-term hold? Thank you. Bye.
Thanks. That's a great question. Let's take a look at the charts. Because I have started to see some movement in oil and gas stocks, but not quite in everything yet. So if we look here at tourmaline, it's just drifting at the moment. It's kind of near this. So at 60, it's just above this 56 support it bounced off of back in 2023. First resistance around 65 and then 70. It's kind of stabilizing, but honestly, right now, it's not really going anywhere. So let's take a look at CNQ, please. CNQ is up higher. It did have a higher low here back in the winter, around 40 versus 36 back in 2023. It has been steadily climbing. First resistance around 45. And let's look at this 45 here is a key level. It's one that I call it's support and resistance. We call it reversal of polarity, or is where support becomes resistance when broken becomes support. It's key numbers, and often it's around a round number, often the case as well. So it's a big psychological barrier here, but we can see 45 was resistance in late 23, support through 24, got broken earlier this year. So now what we're watching for with CNQ is, does it break out above 45? The good news is it's broken out of the downtrend. So to me, of the two, CNQ looks much stronger technically at this point in time. And if it breaks out over 45, it starts looking really good.
Okay. Well, we have lots of callers who want to get through to them. Let's get to Kevin next from Kingston. Kevin, what's your question?
Hi, it's on Visa. I noticed it's been kind of flat for the last few months. And I want to know if you would be buying it based on your technical analysis at this price point. Thank you.
Thanks. So, yeah, I mean, as we can see with the chart, Visa had a good run through 23, 24, accelerated late 24. And yeah, for the last beginning of this year, it's just kind of going sideways. And I did speak to the last caller about consumer spending. And consumer spending has kind of held up. It has kind of been resilient. But it's something we are keeping an eye on, is what happens with consumer spending. Obviously, Visa is very sensitive, critical. Visa and MasterCard, they've got a finger in every pie and practically every transaction between the two of them. So, and American Express and Capital, I mean, there's a few of them, but anyways, the credit card companies have a finger in everything, right? They're getting paid off of transactions. So right now, this thing looks like it's kind of drifting sideways between 325 and 375, and it's just drifting at the moment. It doesn't look like it's not really clear whether it wants to go up or down from here. It's just kind of range bound.
Okay. Colin, thanks for that. We'll be back with Colin and lots of questions. Colin Cieszynski of SIA Wealth Management. We'll take your questions on technical analysis. Welcome back. We're here with Colin Cieszynski, the Chief Market Strategist with SIA Wealth Management. We're taking your calls, and we're going to get right to the phones, Colin, because a lot of people want to talk to you. Glenn from Oakville, Ontario.
Good afternoon, gentlemen. Colin, thank you for your advice. I appreciate your feedback always. I'm calling about Algonquin Power. I'm into this one for the last few years, and I'm underwater severely. I'm wondering if Algonquin is showing signs of consolidating, and I'm thinking of averaging down. I'm wondering if you could tell me what a good price point would be to re-enter. Thank you very much. I'll hang up and listen to your answer.
Thank you.
All right.
So we can see here Algonquin has been in a downtrend for the last couple of years, but to be honest, it looks like back in March, April, it actually broke out of that downtrend, and since then we're quietly seeing it work its way higher with higher lows. That's a good thing. The interest rates is supportive for utilities in general, and we have seen Utilities is an area where they're lower. They don't move as much. They're not as volatile. They don't necessarily rip up to the top of the rankings like a Shopify might or a gold stock. But they're just quiet, steady companies that pay dividends. And in this case, it does look like it's bottomed out here. So so far so good. You start seeing it go above, say, 850. Would look really good, but even here, it does look like it's bottomed out and it's quietly starting to come back. And as I mentioned, for utilities, the Bank of Canada did cut rates last month. There's a reasonable chance they'll cut rates again because we've seen our Canadian employment numbers have been terrible the last 2 months. So that's supportive for utility stocks. And in general, we have seen them quietly starting to creep back up.
Okay, some good news if you have them then. All right, Paul from Orangeville, what's your question?
Yes, I'm looking at the energy fuel. It was down for 2 years actually, and I owned it. Then I sold it, and I bought it again. How does it here at the moment? Since for the past 2 months has been rallying quite a bit, and now it went as high as $26.
Yes, this thing's on a moon. I mean, look at that. That is just a straight up. It's just gone. We call that going parabolic. That's just gone crazy. Anyways, but hey, I mean, look. I mean, this stock is what, $5 back in the spring. It's above 20. Quadrupled your money this year. Anybody who held it. So that goes back to the conversation I had earlier about trailing stops. And that's what when you go on this thing, and you've blasted through every single technical target out there and resistance and everything. That's when you switch over and you just go trailing stops and you say, okay, I'm going to have a mental stop behind me, either X dollars or X percentage behind the market. So, if you're at 22.50, a couple of dollars below the market is 20.50, even 10% puts you down around just above 20 somewhere. And then, if it goes to 25, then your stop moves up. If it goes down and hits your stop, then you take your profits.
Okay. But you have to make that decision though, right?
Yes, you have to make that decision. I just use that as an example, a different risk tolerance for different people.
Okay. Ben from Kingston, what's your question?
Hi, my question is on Boeing, and I was wondering if technically how does it look, and is the order book reflected in the price? Because it looks like it's become a story stock. Thank you.
Thank you. That's a great question. Boeing has had its ups and downs over the last number of years, and It's okay right now. It's basically been trending upward. So far, so good. It's holding above this 210, 200 support. Yeah, we had a bit of a correction with it, but it's acting well, and it looks fairly resilient here. And at the moment, it's basically in a trending upward for the time being.
Does it look like Boeing's past the troubles of the last few years?
So far, so good. But I mean, look, I said that before, and there was a few years ago when we thought that Boeing was past its troubles, and we had actually gotten back into it. And then I woke up one morning and a door had fallen off of one of their airplanes. So I don't know what to say.
Never say never, right?
You never say never. I've thought that before, and it I don't know. It's one that concerns me. It's fine, as I said. That's one of those ones though where you just got to kind of play the trend on it.
Okay. Kurt from Calgary, Newmont. Calgary. What's your question?
Sir,
Hi.
afternoon, I guess.
Yeah, Kurt.
Here, I bought it back in its 40s, so it's been on quite a tear here. Just, I guess, in correlation with gold prices. But everybody sees gold prices continuing to climb, so I just want to see your thoughts on the chart here for Newmont. If you continue to hold it, or if you do hold it, and just where you see this stock going. Thanks.
Thanks. Great question. I mean, Newmont has had a humongous run. It's rocking and rolling with all of the other gold stocks at the moment. So a couple of things we want to keep an eye on here. Oh, and of course, Newmont also gets interest because it's one of the only gold stocks that's in the listed in the United States. So that if Americans start getting on to gold stocks, Newmont is one of the ones that they actually is a go-to. So that's important to remember as well. And so here, I mean, it's had a huge move. As long as the price of gold is remaining higher here, Newmont may continue to attract support. But it's one of those ones where certainly we're keeping an eye on a combination of what's going on with the gold price, what's going on with the stock, and another one of those ones where it may not hurt to consider having where you want to have a trailing stop behind it.
Okay. Colin, thank you, sir. Well, that's it for your calls today, but don't go away. Colin's going to share his top picks after the break. Join us tomorrow on Market Call. Michael Simpson will be on the show. He's portfolio manager at NCM Investments, and we'll be taking your questions on North American dividend stocks. And if you miss Market Call, check out our daily podcast. You can find it on iHeartRadio and other platforms. You can also watch full episodes on our YouTube channel. Okay, time now for Colin's top picks. What are we looking at this time around?
Thanks. So keeping with our gold theme, our top pick this time.
Gold seems to be the place to be.
Absolutely, is Barrick Mining. And this is an interesting one because we've talked about head-to-head battles within the sectors. And a couple of months ago, this is one we have in our portfolio. And a couple of months ago, we had a meeting of our investment committee where we sit every day and we talk about our stocks and our holdings in the markets and what do we want to do. And I walked in one day and I said, you guys aren't going to believe this, but for the first time in 20 years, I'm actually going to say I want to buy Barrick. Barrick within the gold sectors has lagged the group forever. But it started getting noticed and it started picking up and it started breaking out. And we're like, this stock looks absolutely incredible technically. Let's go buy it. And we did. So this has been doing really nicely. When you've seen charts throughout this program of all these gold stocks going on moonshots and parabolic. And we can see with the Barrick, this one's catching up. This is one that has lagged forever, and now it's starting to get noticed. And I've talked about that in other sectors as well, where some of the stocks that have lagged forever and not getting noticed are now starting to get noticed, and Barrick is one of them. So it's broken out here over 35. It's broken out over 45. This next resistance going back to 2011, 2012 is probably around 50, 55. But basically, this is one that has been lagged for a long time. It's been under noticed for a long time, and it's really starting to move.
And what has changed then? What's kicked it off? Is it just people? It really is just people kind of waking up and going, "Hey, Barrick."
Yes, absolutely. I think it's just been that long that the stock has just lagged for so long that people are now, and it often happens. You get the leaders, and you've seen people have said, "I'm in this stock. I've made tons of money on it. Now what?"
Yeah.
Well, now what is we go look and see what hasn't moved yet is often what investors will often tend to do, whether it's small caps or ones that have lagged behind.
Okay, let's talk GE Aerospace out of New York.
Thank you. GE Aerospace, the aerospace and defense sector has been doing really well. And it is one of those sectors that's held up and has kept on going. And GE Aerospace, this stock has just been under nice, steady accumulation forever. But when I went through our rankings of stocks, among U.S. big caps, outside of gold stocks, because I didn't want to just come up here and talk about gold stocks.
Yeah. Although it's hard not to right now.
I know, but GE was literally the highest ranked industrial stock in our relative strength rankings of U.S. large caps. So that's why I brought it in. And of course, being highly ranked, we do own it in our portfolios, and we have for a long time, and we continue to maintain that.
And do you like seeing that steady growth like that? Is that what you want to see from a company when you draw your line and then it's matching it almost perfectly, right?
Absolutely. I mean, as a portfolio manager and an institutional investor, these are the kind of charts I like. These nice, steady, going up in a 45-degree line. We can hold them for a long time. We don't get caught as hard in swings because it's a little more difficult for us to trade than an individual investor. For an individual investor, it's great to trade those big swings, but for an institutional investor, this makes us very happy.
Okay, let's move on to something a little different. SoftBank CDR.
Yes, I wanted to talk about SoftBank. We also look at and do invest in international stocks, and we have international rankings. And again, SoftBank outside of gold stocks is number one on our list, and we do own it in our portfolios. And Japan is an area that's done well. SoftBank is involved in technology and communications. They've done well, so this is an area where a number of things come together. And we have a shorter term chart on this because I wanted to talk about CDRs, which are Canadian Depository Receipts. Most people are aware of the American ones where you could go buy an international company that trades in the United States. Well, now you can go buy international companies that trade in Canada. They trade in Canadian dollars. They're CAD hedged. I talked about the U.S. dollar crashing, and so we didn't with these now with CDRs. You don't have to deal with what's going to happen with the American dollar. You can trade. Basically, these are CDRs that are dealing with the home market in Japan, and you're not dealing with the United States. You don't have to do this roundabout thing through multiple countries to get international exposure. With CDRs, you can get Canadian exposure to an international market. So again, this is something that we have started using this year as they've been launched, and we really like them.
Okay, and how many are out there right now?
It's been growing rapidly, so it's been going quite rapidly in terms of the numbers that are being offered. So far for overseas stocks, it's primarily Japanese and European companies, but that's been growing rapidly.
And a mix of risk?
Yes, a mix of risk. I mean, in some of the other CDRs we own, for example, we own Alliance, which is a European insurance company, as a CDR, as well as SoftBank is another one that we hold in our portfolio right now.
Okay, so and you were like these. You're excited about these.
Yeah, very much. I hope they bring out more.
Okay, all right, Colin. Thank you very much for joining us. We appreciate it.
Thanks for having me. It's been a great show.
Okay, Colin Cieszynski is the Chief Market Strategist at SIA Wealth. Let's take a quick look at the markets before we go. We'll take first one up via the TSX. You can see it's off by about 109 points. S&P 500 just down a little bit. The NASDAQ is up right now. It's in the green at 58 points. And thank you for watching Market Call. I'm Roger Peterson. We'll see you next time.